Okay, so just getting into it. Kick off with gold because obviously this has been the trade the last sort of 2 weeks. We sort of see it really sort of break yet again yesterday. So had this little sort of measured move that was setting up with a nice little triangle. This was sort of coming into the sort of second part of Asia trade after an early sort of push up higher. And this nice little consolidation gave us the measured move, which moved out to 60. And as you can see, it sort of popped out just to the top side of that. But certainly, yeah, the market decided that was enough for it for the short term. So we saw a fairly steep sort of pullback there because I mean we came back down to 38 after this, and this is I guess just after sort of US Open as well. So that's on the shorter time frame. If we zoom it out onto the larger time frame, we can see it's sort of taking out a couple of these key levels where we've sort of seen previously, and obviously had them marked out where we thought the sellers were sitting. And this time there was a heavy rejection. This was the rejection from this 1940, 1945 area, which actually saw 140 or 120 point drop to the downside. And it's recovered this 100%, actually over 100% technically. So that's just an incredible recovery from gold. I mean, obviously, it left that gap last Monday morning and it just hasn't looked back. So, as to where to from now, even though we've sort of gone above this area that we've marked out, if we sort of take these away, we can see a little bit sort of more defined levels of sort of where the sellers may have been, and really up around this sort of 50 to 60 mark. You can see there was a little bit of a sort of churn recently. I say recently, this is what, back in July. So yeah, around this last time it was up into this level, there was a little bit of chop, and then if you go back again, there's a little bit of chop around here. So realistically, we're in striking distance of major breakouts. Major breakouts for me are 1980. Above 1980, I think you've got a good chance you're going above 2000 in a short term, and who knows, like on a fundamental level, if this whole thing persists with Israel, and if Iran gets involved and any of these sort of factors, um, there's no reason that. Firstly, obviously, you can go above 2000. I don't think that's sort of out of the realm of possibility by any means. Um, but I would say that sort of like we could be looking at testing all-time highs. It's hard to sort of say how deep some of these pullbacks may be if they do come. But certainly this is a very steep gradient, and the market is just sort of like not even giving it a chance to pull back each time. Like some of these pullbacks that we've been measuring along the way, 23%, not even 23% some of the time. That just shows high demand because it's sort of basically market's not taking profit, which would cause the price to go down, and even the people or the portion of the market that are taking profit, the segment of the market that's buying it is happy to just pay whatever price. They're not waiting for these great sort of levels. Like, I mean, I missed a good whack of that waiting at 1902. It came to 1908, and then bang, there's another 50, $60 move to the top side. So interesting to sort of see where it does go from here. I do expect possibly a little bit of cooling off around this zone here. But of course, I was saying this waiting for that 1900, and of course, I had to pay a higher price for it. So yeah, look, it's a bit tough to sort of see too much of a direction when these things are just flying up like this. It's hard to really give any sort of technical levels to it. I mean, you can start to sort of say that we've got a little bit of a main trend here. So possibly coming back towards this main trend, this could be offer us a good sort of buying sort of position. You've obviously got this shorter term. It was a bit of a ascending triangle which sort of broke out. So maybe back test of the previous highs over here. We've also saw it was a resistance here. This coming in as a support. So this is probably the zone that I'm going to be looking for to try and get some buys. I don't want to buy it again up around this level. I sold the last actually 1960.2, I think it was. So after this measure move played out. So that was sort of middle of the night. But if I could get back down around this zone, so we're looking 29 to 36, I would be happy to sort of like have another shot to sort of see a reaction of the price sort of come back down here and then sort of take off again. For me, this is at least to retest these highs. I mean, you got to see what keeps happening with this on the fundamental level with all of this. But for this, it's going to give me, get zoom in on these ones here. It's going to give me a third touch up of this line. It's going to give me a third touch up of this line. And then, of course, it's also going to give us a retest, which we never fully got. I mean, this, as I said, it just didn't even have a chance to sort of come back here. A retest here. So this could then sort of potentially be coming in for a just a retest of the top side of this. I think this would give us a chance as well, sort of like if we can get these sort of deeper sort of pullbacks, it may give us a chance to flush out a couple of the longs that have got their technical stops in. Again, you run the risk of just missing the whole thing if it just keeps on running up. But obviously, after these large moves, and obviously you've got a couple of factors of levels where, take the war out of it, this is where they were selling it. So there's a good reason that, there'd be a portion of the market that still want to sell it at this level. But in the short term, if we can get a third touch up of this shorter term trend, third touch up of this larger sort of trend, a back test of this previous resistance zone, I think sort of around 32 might offer a pretty good entry to get long. And then at least minimum, then you want to be retesting these highs over here. So up to this zone over here. And then obviously, if you can, which I do think it does have the potential to do, go through and then sort of continue this whole sort of move to the top side. I think 1980 is going to be very, very hard, and potentially you could sort of see 1980 get a strong rejection, come down, possibly even give up the main trend. This is provided that this scenario plays out, but I would say you could potentially be seeing 1980 break the trend, really flush out some of the longs, and then sort of see another sort of spur up to sort of go above it. But yeah, first things first, I think sort of a little bit of cooling off. I reckon we're looking back to sort of 1930s, 1932, 1935, this kind of level, and sort of get a long position set up from there. Obviously, sort of, play with the stops so we don't get sort of held holding too much. But at the same time, I think this has definitely got more upside to come. DXY. So DXY refusing to sort of go down. As I said, got like sort of just there, look, continuation down. Got I don't know what is that? Sort of 1 cent from from the alerts. So this is why I always put the alerts just a little scrape further, because technical level here, it did take out the lower low. But look at this reaction, bang, snap back up, and it didn't really sort of push back from there. It was just actually just ticked over 11 o'clock now, so we've got DXY coming online. We're seeing a small little gap down. Now, as I've said a couple of times with DXY, high percentage of the time it'll follow the open direction gap. As you can see here, we had an open, it went up, followed the direction, obviously came back down, snapped it out, but overall general theme of the day was up. Same thing here, we had the gap up and direction straight after was up. Obviously you get later on, you get this large sort of swings and volatility. Here we got the open gap, and this one obviously sort of like, gap down. Sorry, just getting a quick phone call there. So if we actually just have a quick look at this here, so we've dragged some lines across here. So that was the high that we got. I think this is Monday morning. Yep. So this is just above Monday's open that we've just come up clipped, and you can see markets just sold this down here again. It's currently put in technically a lower high. So we do have a little bit of, whoop, wrong one there. Do technically have a lower high in this second effort to see the continuation. This has fizzled out a little bit. So now we're looking at this zone down the bottom over here. Chuck a little support on. So we're going to call this just a, I mean, the lower level zone and that. Obviously, you got the wicks down underneath, but it's always a little bit. So where do you put the wicks? I mean, so where do you put the supports? I like to put them not too heavy because there's no point having a range of like 20, 30 cents just because it had a super long wick on it, because they could be stops and all these kind of things. Decent size support zone just underneath the body of the candle. This way it sort of shows that if you get that close down underneath this level, it's worth looking at, because realistically you can still get a candle come down here like this one did, and then it can just wick straight back up. So there's no point getting ahead of ourselves in that with it all. So anyway, what we're going to do is just go put an alert down here. One that. Right. DXY, lower low, and see if we can get something sort of going off with this. All right, so basically, so with DXY, as I said, it's refusing to sort of break down further. It's very strong support around this sort of 106 level. So realistically, again, this is a higher sort of level that we want to get under, and this is realistically where we have the alert set up. So for now, main sort of target is this short term 106.40. So early sort of drop off. If we go through this sort of little short falling resistance that we're sort of setting up at the moment, then okay, we're looking for the top sides and we're looking back up over 106. Here we go, 106.70. So I would say nothing really of note at the moment. It's only sort of early days in the session and that. So yeah, so 1 second. Yeah, just get a phone call. Yeah, so it's only early days in the session, but we can see this short-term sort of falling resistance. Obviously, it's popped. It's come back here. It's retested that breakout level, and it's fired straight off again. So we've really got to see what they're going to do with this. Are they going to sort of drive it up here higher and continue this more short-term move? Or was this just a little bit of a fizzle out sort of run and sort of like altered by sort of like, I think there was some Fed speakers and that overnight. So for me, I'm still looking for potential sort of downside with it all, but I'd be cautious to be taking too many positions against it just in the short term here. I think the overall picture is still just this main ranging sideways. So again, these are the levels that we want to get through. We can still trade it intraday. Obviously, we can sort of take the short bursts of strength, but realistically, till we break these levels, we're not going to have a clear cut decision, direction, in my opinion. Aussie actually sort of worked out very well yesterday, sort of intraday. So we were sort of shoring this was the channel that we drew yesterday. I think it was around, where was it? So 11, 10. So it was around this zone here yesterday, sort of when we sort of said, look, we've got to redraw this. We had that initial head and shoulders that came out, took out the measured move, came back here, and as you can see, we had this sort of like rising support or channel support, came in perfectly, within a cent or so, and then really sort of fired off. This sort of came right up until this is actually off the back of the China data, so very strong China data, which had a good reaction, which I'll get to China and the yuan in a moment, because certainly that's quite interesting what's going on there. But if you saw my video, I can't remember, it was a couple of days ago, but I said Aussie always has an issue with the 90s. And I think I said 91 and 90, well, I did say 91 and 92 particularly. Like, so if you're trying to sort of get long on an Aussie position that's coming down, it'll always pop that sort of handle, and a 91, 92, more often than not, like drastically more often than not, will offer a great entry for a rejection of that level. But like support and resistance is the same, it obviously creates it as a little bit of a sort of a heavy sort of sell zone, like a resistance. And you can see this perfectly evident here. Every time it came down here, 91, came down here, 91, came down here, 88. And look at the rejections of these each time. And I can't remember where it was, but I think it was Monday or Tuesday. So, we would have been down certainly sort of, 50, 60 points off at least this mark. It's come up here, you can see where we've got it marked out. Of course, you know, again, these arrows are price levels. They're not time levels. You know, I mean, these things can fire up, bang, bang, but this is where I expect people to be buying and selling from. And that's it. It's just, that's all it is. It's just where the market has previously priced the instrument. And you can see this and you can see it happen time again. And when it breaks these levels, what does that mean? It means there's the depletion of buyers or sellers, depending which direction you're going. But, you know, we sort of had this level marked out. And as you can see, it's come up here. It's clipped it, 92, 93, and bang, it got hammered. And once it gave, particularly once it gave up this channel at 61, oof, another sort of 30 points to the downside. We did get this big push so through the middle of the night. I think, as you said, I think we had a couple of Fed speakers, so I think this would have been around that moment, but obviously that was very short-lived and was undone the next hour. So as of right now, it doesn't really seem to be doing too much. We do have a bit of Aussie data coming out in a few minutes, 20 minutes or so. We've got, I think it's the employment data, is it? So let me drag this one across here. Yeah, so we've got employment data, where are we at? What are we looking at? Can't find the right day. Here we go. Okay, yeah, so we've got employment data here. So we're coming out, expectation is quite a drastic sort of drop off in terms of you know, jobs created kind of thing. So 65,000 and change previously. We're looking at over a third of that last print. Unemployment rate looking to sort of stay the same at 3.7%. If these numbers come in strong, I'm expecting to see an appreciation in Aussie dollar based on the fact that, you know what I mean, we've got the new, so her name eludes me at the moment, but we've got the new RBA woman in there. She's appearing to finally come across a little bit more hawkish and sort of saying that, okay, look, you know what I mean, they're talking about potentially sort of raising. We had the minutes out the other day and they were saying that, look, it was a bit of a toss up as to whether they sort of were going to pause or raise, and obviously they paused. But certainly, if they have the data that supports it, CPI is going to be the big one that they're going to be looking at because CPI, if that's either going to tick up or hold sticky, they're going to have to start to do something again. We're on like four or five pauses in a row, and inflation's not coming down. Housing market's going bonkers. What are they actually even doing? No idea really, but regardless of that, if those numbers come in strong, I'd expect Aussie dollar to sort of move up based on the idea that, you know what I mean, people are still employing people, there's still money obviously going around the system, which is going to exacerbate the whole inflation situation, and they need to do something about it. So yeah, we'll have to sort of wait to sort of see how those numbers come out. Obviously, at the end of the day, Aussie data is only so good dependent on what's happening with the US and, well, more importantly, US dollar. We can have really strong data supporting Aussie strength. If that's counter to what's happening in the US or for the US dollar, we may be able to sort of pair some of the losses than we may have been taking had we sort of had bad data and also the US dollar sort of kicking along. But certainly, if you get the US dollar sell off plus strong Aussie, it can be a double whammy for us moving up to the top side, or at least not maybe necessarily. Like, we're not going to sort of fire right up and go up 100 ticks or something, but it means that sort of if we go up sort of 30 or 40 ticks, there's a good chance that we hold those gains relative to sort of opposed to sort of like if, you know, the US data was a little bit stronger, or sorry, not the US data, but like the overall general US dollar strength was a bit stronger, and then we'd sort of get a flare up, and then it'd just be straight sold back into. So that's out in, yeah, just under 20 minutes now, so we'll sort of have to see how that goes. Certainly a lot of work. I mean, the Aussie, all in all, just, you know what I mean? It's sideways, but it's just grinding lower, lower, lower. So, you know, again, sort of these are the first levels to get above if you're looking to sort of get anything meaningful long. I mean, realistically, actually, above yesterday's wick, so above 64. That's the first key level. 64.50, 65. They're fairly round numbers. for where they want to go. But realistically, this is just chop fest and a slow grind down to death for the chop fest for the Aussie as well. And copper. So copper's reaction. This is yesterday, or so yesterday's video was done just after this reaction here, and that fired on. It doesn't look to have held it a great deal. It hasn't completely undone the move, but this was a reaction from down underneath these main supports. As I was saying, it was like 11-month low for copper, and the reaction was up over here, and we saw that follow through continuation. That has petered off a little bit and not really doing too much at the moment. Excuse me, but yeah, I think it's sort of like showing that certainly there's some buying interest around this level. But the thing is, with such a strong reaction, this could be last hope kind of sort of stuff, and this realistically could be short covering the speed in which it sort of came back up as well. So it's not necessarily all buying, but it could just be people sort of going, okay, yep, that's it. We've hit the yearly lows. We've got a couple of reasons, and bang, it's fired up because short covering is essentially buying, which gives that sort of strength to the top side. So if we do come back down here again, I don't expect to see this reaction again quite so strong, if at all. So certainly, yeah, it's interesting to sort of see where it's going. I was expecting a little bit of upside movement. Obviously, I wasn't expecting this downside first, so this is a nice way to sort of snap out anybody that's actually trading copper and sort of were long on it all. But certainly, if we can get back above those wick highs from yesterday, then we could see a further continuation up, and we could start to see, realistically, this larger sort of channel come into play. So around sort of 368 and change just for the highs over there. But certainly I don't see any reason why it's going through this level at the moment. And I think sort of the strength is still skewed to the downside. So, and finally, just with China. Well, the yuan. This was where the data came out yesterday, and you can see it was really strong data for China. So they had sort of like, I think it was GDP, maybe retail sales. There was a number of it was like 4 or 5 bits of data out all at once, and it had a very strong reaction, as you saw. Same with the Aussie. Everything sort of kicked on, but despite all that, it still wasn't able to hold the lows. And as you can see, it flew right up and actually sort of undid and put it, actually still technically booked in intraday high for that session. So yeah, I think at the moment it's just a bit sort of like in a nothingness sort of state. This is on a lower time frame, but if you have a look on the daily, it is slowly grinding north, but realistically, not enough to sort of say that, hey, look, you know what, we're flying up here. This could be a sort of long-legged doji, no, not gravestone doji, hanging man. That's right, that's what they call them. A hanging man sort of candle there, which typically would be showing a bit of a short-term top. As obviously the sort of the pushback up is a second effort. If it's unable to sort of fire through, then that second effort's going to fail, and we're going to see a bit more of a move to the downside here. But realistically, there's just absolutely doing nothing at the moment. It's just grinding sideways. It is worth noting though that you know, that reaction and the fact that even with that really strong data, it wasn't able to sort of continue it to the downside. So that's interesting to sort of watch because obviously upside's fairly capped. And if they go through this zone up here, 737, 736, 736.6, then yeah, I would expect a fairly sharp move after that as well. All right, cool. That's about it from me for now.